Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Injective and its token INJ. None of the content is financial advice, so let's get started. Over the last 24 hours as well as over the last 7 days, Injective has been part of a healthy rally of about 5.5%. The market cap is above a billion. Volume is at around 178 million. In terms of the tokenomics, about 100 million INJ tokens are in circulation. That is very close to the total supply. This crypto does not have a max supply, but in terms of the token unlocks and tracing the divergence between price and market cap growth over the last year, you can see if you toggle between the market cap view and the price view is essentially the same. So whatever growth happens in the market cap is getting reflected back in price. Does not have any major token unlocks as you would expect at this point in time, especially since about the last major tranche of unlocks occurred in January 2024. In terms of what this project is about, it's about building a blockchain for finance and real world assets. You can read up on the tokenomics as well as how the crypto is uniquely positioned on platforms such as its own website and aggregators such as CoinMarketCap, CoinGecko, etc. Again, this is not an endorsement of the project in any sort. In terms of the price analysis right now, the price is at around $11.38. In terms of the Fibonacci levels, you could estimate from the 2021 peak. Now in 2024 it did make a new all-time high at around and made a resistance at around 1.618 Fib levels. From that point in time, from early March of 2024, the token did retrace back to the 0.23 Fib level in terms of the Fib level drawn from 2021. Late March, early April of 2025, when the crypto market was in a downturn, held this 0.23 Fib level at around $6.87 at support, and then rallied back to the 20-week simple moving average, where it met a significant amount of resistance as one could expect after a rally from the lows to the 20-week moving average. Now the price is kind of pushing sideways and meeting the 20-week simple moving average and the 21-week exponential moving average as a resistance, failing to break out. In terms of the current price and the proximity to the key levels, the 0.382 level as a support is available at around $10.42, whereas the $13.30 level is the 0.5 Fib level, which is acting as a major area of resistance. In terms of the simple moving average, they are currently poised at around $11.40 and $12.57 respectively. So those are the key areas to look for. In terms of the machine learning based price forecast, the models developed on website cryptoweeklies.com, not just for INJ, for top 100 cryptos by market cap. In terms of the next 6 months, the outlook presented by the model in a non-euphoria 1 standard deviation peak is in the bullish case is between $11.98 and about $31 in a non-euphoria case. In the 2 standard deviation euphoria model, with a peak in the last month of the post-halving year, that is in December of 2025, the bull case is stretched between $13.54 and about $61. The base case, that is if there is no major catalyst to the upside and the downside, if we rely behind the trend, behind the price action, it says that there is a higher likelihood that price goes up with time than down with time, accounting for major bullish moves that Injective has made since about January 2023. The base case between $11 and about $13. If on the other hand, if there is a sell-off in the market in the next 6 months, this model says that the support is between $5 and about $9.21. Again, the purpose of this model is not to tell if the price has to go up or down or stay sideways. Those things are dependent on the market forces. But with this kind of modeling, it helps identify what are the theoretical floors and ceiling in an event of a bullish catalyst or a bearish catalyst in the market. Going to the regression based fair value estimation, the polynomial regression based model says that right now the prices is meeting a key area of resistance in terms of the fair value. It has already crossed the 2 standard deviation residual on the fair value. The 3 standard deviation is all the way about $14.90. That's about 99.7% confidence that the prices stay below this level or at least meet a significant resistance at around $15 mark. The the regression based valuation, if we were to account for that in terms of the DCA model at a daily price level, this is price color coded with respect to the DCA, with respect to the divergence between the price and the regression based fair value. You can see that right now per the model the risks are kind of amplified as the price has gone away from the major support and rallied up quite a bit from $7 to at one point 2.5x at around $15.5. In terms of the 20-week simple moving average price, though, the risk levels identified by this model as it relates to price versus 20-week simple moving average is at around 0.26. That is per this model the third best time to DCA. If we were to go and check historically what are some of the key levels where the price action tends to top, it's between this 0.4 and 0.6 risk. If the price were to go to that those levels, the 0.4 is at all the way at about $23, the 0.6 is at around $29. So between $23 and $26, that's where the previous all-time high for Injective was at in the 2021 rally. So those are the things forecasted using the SMA based risk reward analysis. The time weighted average price model for Injective states that the time weighted average price for Injective is coming in at around $12.11. The current price is slightly under the time weighted average price, and you can see that historically speaking, as the price approaches this blue line and goes slightly below the blue line, it has been historically a accumulation territory for Injective, again with the hypothesis that if there is one more leg to the bull run and Injective participating in that bull run, accumulating below the time weighted average price historically speaking has not been the worst idea. The risk is, again per this model, is rounded off to 0 as an aggregation of all the three risk reward based models. If we look at the Injective's price action at this point, the estimated bull run peak with the regression risk kind of amplified at around 95%, time weighted average price close to 0%, and simple moving average risk is somewhere at around 25%. The weighted risk comes at around 52%. The current price of about $11.60. The estimated bull run peak with the hypothesis that at the bull run peak all the three models have an elevated risk score at around 90-95%, like the regression risk score is exhibiting right now. The estimated bull run peak in that scenario is at around $20 to $21 with a reward of about 1.8x from the current price. And with that, I would like to conclude by saying first, the major area of resistance to contend with are the $13.60 and the $15 level, above which the SMA model based peaks are somewhere close to that $22 to $29 territory, whereas in terms of the 2.618 is still in play per the machine learning based model for Injective. If you look at the INJ model from the machine learning perspective, the 2 standard deviation ceiling bull run case is at around $61, which is kind of confluent with the 2.618 coming in at around $64.80. So these are the weekly averages. So in a week where the average is at around $61, the high candle for that would be at around could realistically be at around $60-65 level. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.